All right, we have our tools, our trading concepts, and let's prepare to get ready to find our opportunities. So, trading day prep begins after the day's market close. So, as swing traders, while we're not focused on sitting in front of our screens all day, if you have a full-time job, which is just all well and good, and swing trading is fabulous for that, where at the end of the day, after dinner, after some relaxation, we can sit down and start going through our scans and looking at what's happened in the broader markets and sectors and stocks, as previously explained. We can monitor news and what was moving, what has affected our positions, and looking for new trading opportunities. We go through the charts, we close some trades, we complete our trading diary, good trades, bad trades, and so on, what happened, maybe making a audio recording while you're capturing a chart. That's what I'm showing you here, whereas you can have a chart and Microsoft OneNote, you could be capturing your screen and talking about it and keeping that as reference to part of your trading journal and referring back to it at another time, as that's your review of your trades. Your watch list, is there something on that watch list that you want to include for the next day? You're looking at multiple time frames, and as we just talked about, the broader markets, those sectors, market internals, set alerts. Use your computer to your advantage to where you're getting an alert, and obviously these can be connected to your phone today, or even sending yourself an email to pay attention that an event has happened. So you're beginning your search. At the end of the day, as you're looking at the broader markets, as we just previously reviewed, and as to what you're going to focus on, you can review your universe. So in other words, you could take a particular group of stocks or several stocks that you have determined to be your universe. And what you could do with this software that I've already showed you is you could create a scan that says, look, I'm interested in stocks that are between $5 and $25. Just giving you an example. You could say I'm interested in stocks between $10 and $100, or whatever it is that you decide. And within that price range, I want those stocks to be trading at a minimum of 500,000, you might say 1 million shares, over a period of the last 30 days. And that would, if you were to just say stocks between 10 and 100 that are trading at least 1 million shares over the course of a 30-day average, you'd probably knock down thousands of stocks to below 1,000 easily. So you can decide, where you would want to focus your list and make your own universe of stocks. You're looking at the sectors of interest as explained and particular stocks. You divide your list down into your best ideas, either long or short. You'll check earnings dates, of course. And when I say sector generals, that means the big stocks that are being focused on by institutions. Everybody, of course, is going to pay attention to when Amazon reports, when Facebook reports, when Apple reports, when Netflix reports, and so on. So while you may not be in them, your stock that you're holding may be affected by that. So just be aware. You may want to raise your stop at that point, or maybe even put an order in to sell above current prices where you're anticipating that prices might move up. Economic reports that come out, you may decide that there's a big economic report coming out at 10 o'clock, so you're going to wait till after 10 o'clock to put in an order, even if it triggers above a certain price level or below. You can set up a screen like this where you have all of your ETFs set up, and it may take a couple of pages to do that unless you have pretty small charts. But what it enables you to do by setting up these pages is just click on that particular tab in the platform. And of course, you could set this up. You might be using eSignal or TradeStation or Thinkorswim, which Thinkorswim doesn't have such good charts, but it's great program for options. But in any event, you can set up a page with your different ETFs where you just click on that page and they all come up at the same time, and you can instantaneously look at all of these different ETFs and say, hey, this looks like there's a pullback in a particular ETF, or this one's in a downtrend, this one's in an uptrend. I'm going to stay away from this one, but this one has opportunities. And one of the great things about this platform, and I don't know, I think it's this here, I think it's that particular little icon there, that if you click it, it'll automatically open up the list of stocks within that particular sector. So pretty cool feature to be able to zero in, and it'll open it up right on that page, and then you could link a chart to that particular miner on that page, and you could start scanning through that. So it enables you to go through things pretty quickly. So here we have what you'd be looking for. Right, master trader buy and sell setups, a gap list, which we created scans for that. We can, even if you're not trading gaps intraday, a gap list is a pretty good place to start looking for new opportunities, even for swing trades. As we looked at some examples, some of those professional gaps were great starting points to a move. So reviewing a gap list, we can review big volume spikes, breakouts, breakdowns, wide range bars, bottoming tails, topping tails, shakeouts, climactics. If you can see it on a chart, odds are you can scan for it. Once you've scanned for it, you then begin to cherry pick, meaning as the scan brings things down to a workable level where it eliminates what you don't want to see. And then we start looking at multiple time frames. We look for, as I explained to you, how the pattern forms. Is it erratic? Is it tight? Is it whippy? Is it near support? Is it showing relative strength and weakness, or moving averages that speed up the analysis? Is there a void? You're going to know, is it going to report earnings? Your volume part of your scan should have eliminated the low volume ones. But so I'm pointing out what you need to pay attention to. Your market internals, are they set up saying, hey, I've got this long setup here to buy a breakout, but my market internals are at a bearish extreme, and the broader markets have already run up 5 days in a row, and this stock is now going to break out of a consolidation? Historically, that doesn't work. Maybe it's on its own page and it can fight the historical norm, but the odds are against you, and our whole focus here and objective is to put the odds in our favor. And this is that same page that I showed you before, where you have stocks in the ETF that are linked. And as you click on those particular ETFs or the broader market, it's going to fill that particular minder in with the information that you put in that particular minder. And then you start going through and looking at the charts. I'm looking at my daily with my 20, 50, and 200. I've got my weekly on there, 20 MA, which I've already told you is what the 100 MA is. You don't have to put the 100 on your daily chart. And as I click on each one of those symbols in the stock minder, it's going to populate those two charts. And as I hit the down arrow button or the space bar on this platform, it's going to populate the next stock. And I'm just going to go through them. As you get used to doing this and you hit that space bar and it fills in the chart, you're going to look at those two charts in probably 2 seconds and know whether you're going to look at it a little further or not. So what we see right here on these charts right now is something I'd pay attention to, because I've got a pullback to a rising 20 MA, bullish alignment of moving averages with a weekly uptrend, and the last bar on the chart was a gap down to the area of that prior bar 2 bars ago, and it rallied back up to the high of the day. So that particular scenario is one in which I want to pay attention to and buy that above the high of that bar, looking for prices to move up to make new highs. So here is another screen that I utilize that scans for different candle patterns. So bullish wide range bars, 180 bullish reversals, bottoming tails, bearish wide range bars, topping tails, bearish 180s, and range expansions. So I can sort this by what's active, volume. I can put different criteria in these minders. But what I do is, these simple minders or simple scans, I just start looking through the active ones. And as I click on any of those symbols, it populates the two charts, and I start my scanning process to cherry pick the stocks that I'm focused on. And as already mentioned, our primary focus is to trade in the direction of the trend at the appropriate moment. And this software helps us find those opportunities relatively quickly. And that's what we want. This is my internals page. Obviously, it looks different than what I showed you in the prior section, but this is how we can set it up in TC2000. The McClellan oscillator or breadth on the upper left, the put-call ratio in the middle on the top, and quickly looking at the broader markets on here, and volatility index, which is a measure of anticipated volatility where our focus is whether it's at a prior low. Prior lows do not mean short the market. It can stay low, but our primary focus with volatility, the VIX index, is when it reaches a prior high or a high extreme, which is associated with a market bottom. Earnings dates. If you don't have the TC2000 platform, which will give you the earnings date, you go to Yahoo and look up the earnings date, and right there, save the page. You should have it in one of your saved pages to go to during earnings season, and anytime you're going to trade any stock, you should be checking to make sure that it's not going to report earnings, because earnings season happens over a course of weeks, and you don't want to be blindsided by buying something or owning a particular stock and then having a negative surprise. It's nice when it happens in the other direction, but that is not professional to be owning a particular stock and not being aware of when it's going to report earnings. Econo Day is another site where you can go to, and it gives you all the economic reports on any given day that are coming out pre-market or at 10 or 10:30. You may be aware of that, especially like on this particular day, the petroleum status report was coming out at 10:30. Well, if you own oil stocks, it's going to affect them, so you would want to know that. Housing reports going to affect housing stocks, obviously, and construction stocks. You should be aware of that. So just taking a look at this takes a matter of seconds to just be aware, and you're making educated decisions as to the information that's coming. This is a yearly chart of the Dow, as you can see, and I provide this to put the market in perspective. Now, we don't trade the yearly chart, but knowing what the market is doing long term, or even a sector, puts it in perspective of this market is going up essentially almost forever. And while I can't assume it's going to go up forever, and I think it will, honestly, but there's going to be corrections along the way. That doesn't mean we don't want to be aware, based on our market internals, especially like the yield curve reaching a bearish level, that the market is likely to go through a pretty severe correction percentage-wise. But as you can see here, the market has been trending higher. Now, I wasn't around in 1929, but we all know about the big crash and how much this went down from around 300 down to looks like around 10 or 20, whatever that might be. And then, but you can see here that the patterns are exactly the same, even from a yearly chart perspective, where there's wide range bars and bottoming tails and 180 reversals that you can see in 1974. And in 1982, there was a bottoming tail bar that took out the prior year's low and turned back up again. 1987 crash was, where's the crash? Of course, it was a big move percentage-wise, but in the perspective of a yearly time frame, it looks like nothing happened. 1995 was the continuation of the uptrend after a consolidation that went on for about a year. You can see the narrow range bar that preceded the wide range bar in 1995. 2000 was where the yield curve inverted, and there was a big bear market that took the NASDAQ down about 90% at the time. So it was a big move, and even though this uptrend has been intact for many, many, many years, the devastation that can happen to a portfolio over the course of a couple of years or even 1 year can be tremendous. And as far as an individual stock goes, some of them never came back. So it's something to take seriously, but I certainly wanted to put in perspective from a long-term point of view of what's happened here as a view of the Dow Industrials. And there was a big bear market in 2008 that bottomed out in 2009, and you can see the big bottoming tail bar, and then you can see how the advance continued from there. So looking at this chart at the end of each year to see what's happening from that long time point of view, why not? It's just a matter of pressing a button and taking a look. So why not? Look at the yearly chart. You can look at a quarterly chart. You can look at the monthly chart. And this is part of our top-down approach of seeing things from a very long-term perspective and then putting it in perspective of the shorter time frames. And as we're interested in here, from a swing trading point of view. And so our long-term view of being up and then assessing what's happening in our market internals, and is there risk growing for longs? Is there opportunity growing for those longs at the appropriate time? And so hope you've enjoyed this, and let's move on to our next section. One last slide just to review here what I've already said you need to be doing, viewing those longer-term charts and internals and stocks and your trading diary. Of course, that's where you're going to find out what you're doing right from a technical point of view, what you're doing wrong. The consistency comes from finding out what you're doing wrong by keeping that journal and then stop doing it. Right? And that's part of the homework. And of course, take some time to relax. I know from my own experiences, when you're starting out in the markets, you are trying to learn so much so fast that it becomes consuming. You have to force yourself at times to step away and say, relax and smell the roses, spend some time with the family. I was certainly guilty of that, of just spending every waking hour to devour as much information as possible. We do come to the markets, most of us, after another profession. Very few get started as you might in going to college. But it's a great thing to be sharing this kind of information with your kids. So, and I've got plenty of subscribers that do that. Now, getting a 20-year-old to pay attention to what the stock market is probably going to be difficult, but the information is there to share. And if they learn this stuff at an early age, well, don't we wish that we all paid attention to this kind of information at that age? It would have been a great thing. So let's move on to the next section.